Well, hello, everybody. It's Monday,
Hello.
and the market's different to last week. We're seeing some signs in the tea leaves that could be construed as positive. We're seeing some very crazy degen behavior. We're looking at a few macro elements, big things happening across crypto itself. A lot of people thought crypto had died, shriveled up, and gone away. But no, it's alive and well. We'll get into that whole story today. First of all, Mando, good morning. How are you?
Hey guys. Yeah, good to be back. Sorry I missed last week. Yeah, it's been I don't think I missed that much, if I'm honest. It feels as though the market looks like it's set to be in this chop holding pattern for a little bit here. But hopefully there's some catalyst, but that's just my gut. Having come back and looked at the screens a little bit more, I was just like, it's quiet out there. The quietness reminds me of these periods where we go months of nothing happening.
It's so funny. I do a video on Saturdays recapping the week, and the previous week to Saturday, 2 days ago, the price was exactly the same for Bitcoin. Nothing had changed, and it's pretty much the same as it was last week. CTO, how are you today?
I'm good. I'm, of course, thinking a lot of the market here. I think key will be in how the US stocks go from here. And we'll talk about it.
Because we are seeing very, very close correlation. You know, a lot of people think, oh, crypto's down, crypto's terrible. But, you know, tech stocks, NASDAQ got hammered as well. We'll talk a bit about that too. And Marty, check.
Hey guys, how you doing? No, everything good. Finally, we got that 50% pullback on Bitcoin, which is fantastic. Took out exactly 50% down to 82,800. And I think we're building back up now. We correlated very closely to the NASDAQ futures and to the SPY. The NASDAQ and the SPY took their biggest beating, as we know, on Monday last week, right? 10%, 11% pullback on the trade war narrative. Oops. So I think that's finally over, or could continue. We'll see. But that correlation is definitely happening. But I think that overall, the 50% pullback on Bitcoin is what we needed, and now we should chase gold and global liquidity again, which is at an all-time high. Gold is
Has it been 50% pullback? Has it been a 50% pullback on Bitcoin?
Yes, 50 on the move. Remember, it went from 50,000 to 108,000. Halfway of that is exactly 82,500.
I see what you mean. Okay. Yeah, I see what you mean.
Yeah, it'll always do that. 50% pullbacks. So I'm optimistic that that's the bottom. I went long, obviously. I'm at the bottom, 2x, and we'll see how that goes. And there's a lot of other traders out there that are trading, which is a good sign. People trying to believe that it's the bottom, and some people trying to believe we're going into a bear market, which is interesting. We've got some things going on there. But, I mean, the biggest news to me was on the regulatory side again last week. We can talk about that. It's nice to meet you guys, to see you guys again. Had a good weekend. Everything's good. Mando, congratulations. CTO, good to see you. James, as always.
Okay, so today we're going to talk about quite a bit of stuff. A new SBR update with some rumors. We'll talk a little bit about Sailor and the Bitcoin adoption roadmap, which is kind of interesting. Some funky stuff happening out of Europe. It continues to be very Orwellian. We'll share that kind of run on the bank story, the fear of the ECB. We will talk a little bit about who is doing a 40x short on Bitcoin and how much they're paying in fees. It's very funny. We'll look at all the cryptos and distance from all-time high, because that's also pretty shocking. Some daily active user, daily transaction info, where the money is flowing to and from. We'll look at stable coins, dominance, fees, a little bit of macro key events. And then a story I touched on yesterday is kind of, is this the new Gilded Age as we go forward? I'd like your perspectives on all of that too. So let's get into the very first story if we can, and then we'll check out the charts as we do this. This one that was kind of rumored out last night, and I don't know what exact legs it has, but there are supposed rumors that the U.S. president could they're going to build a sovereign wealth fund. It's pretty clear. It was very interesting, actually. The All-In Pod, they were talking about how the Social Security in the U.S., if they invested in the S&P 500 in 1971 instead of treasuries, the it would be 1/3 of the entire market cap of everything. Anyway, the point is this sovereign wealth fund will be built, but apparently the president wants to steer funds for the sovereign wealth fund into Bitcoin investments. Michael Grimes, former Morgan Stanley banker, believes this. And also, they could use money from tariffs to fund this too. It's unconfirmed, but it is interesting to think about what could happen. And I do believe that this current administration wants to really shake things up. Mando, any thoughts about this craziness?
Yeah, so how are sovereign wealth funds normally funded? Like the biggest ones are the ones out of the Gulf and the Nordic regions. I think the biggest one may be out of Norway. And they're generally in the past have been funded from country sells natural resources, normally oil, gas, and then use that. Like Norway had all the North Sea gas, and then all the ones out of the Gulf are like gas and oil from that region, and then they use that to fund things. In the US, it becomes a little bit more complicated because there's no like state-owned oil fields or that sort of thing. So then you have to look at what assets do they own to potentially fund that. The assets would either be their gold holdings or maybe some real estate holdings, or like we said, they own like 4 billion of Swiss cheese. Like it's kind of a bit crazy, like what they have on their books. So maybe they could sell something. People have looked primarily at gold before and been like, oh, maybe we could do that. The other way would be, some form of income stream. There was some light rumors that the tariffs could be used to do this, but I thought they were shut down a couple of weeks ago by Lutnick, who is going to be running the Sovereign Wealth Fund. Now, they change their mind all the time. Like maybe they'll realize in time that maybe tariffs are the best way to do this. He also said they wouldn't sell gold to do this. The other way that you can fund a Sovereign Wealth Fund is actually by raising debt. So at this stage, the Norwegian Sovereign Wealth Fund is so big they actually raise bonds against some of their assets. So what you could do is seed the fund with, let's say, some gold or real estate and actually raise debt against it. So you don't actually have to sell those assets. So they could do tariffs. My best guess for them, like raising capital, would be having some assets already like almost given to the fund and then raising debt against them, so you don't necessarily have to sell them. And that could be gold holdings, that could be other assets, that could be real estate, and then you build it up that way. I don't think right now in that form it looks like it would be as big as some of the other sovereign wealth funds. Like if it was just done by tariffs, I think tariffs would probably only get a few billion, like not hundreds of billions. So I don't know, but right now I would say that is likely. We need to find a way to fund the sovereign wealth fund. Like they can't just say, hey, we're going to create a sovereign wealth fund, we're going to buy stuff. Like how do you actually do that? And I think they'll probably muddle through and work out down the line. Either they have to raise debt against some of their assets, sell some of the unneeded like commodities they have, and then potentially they do tariffs. But a lot of the stuff for tariffs is being used right now to balance the fiscal deficit. So I'm less sure that tariffs will be like the cornerstone of how that thing is funded.
Yeah, it's interesting you mentioned assets they could sell. There's tons of real estate now because of Doge that has been vacant for the last 4 years. They may offload that, and I don't know how much it's worth, but
I mean the biggest sovereign wealth fund is 1.74 trillion. That's Norway, and then China is 1.3 trillion. Then UAE is just under a trillion. Saudi is 770 billion. Singapore is 770 billion. There's your numbers. Typically, it comes from a country's surplus for revenue. That's pretty much how they usually fund it. So you got to look at the specific economic activities of a country and their resources. Typically, revenue from export of that is what funds these sovereign wealth funds, which has happened to date. So I think definitely there might be a tie into the tariff strategies to fund this, as well as our excess, all the gold reserves. You know, in the Bitcoin Act, they've already said that they might start funding this from gold reserves, which is gold certificates, which is interesting, or repricing the gold certificates. Right.
And Besant did say as well late last week that they are trying to avoid an absolute disaster within the US economy. That's why a lot of this is happening, because it is completely bankrupt, like most other countries around the world. CTO, what do you make of all of this craziness?
Yeah, I try to understand this also. Like, why would they actually create the sovereign wealth fund if they're this much in debt? Is it to kind of try to trade themselves out of the debt, or what's the logic behind it? Is it that?
Yes.
Yeah, I would guess so. Yeah.
Yeah.
Like it was the idea that instead of excess revenue or tax, basically any money that they get, they're just spending straight away. They would be more like an investment style fund.
Yeah.
That's how all these sovereign wealth funds are based, like actually doing better with the revenue of the government.
So let's hope we get the US government start watching the DCA show then to learn to invest.
Well, there was so much talk from the Bitcoin conference as to how the US could escape debt by the year 2040 if they invested in Bitcoin. And that plan from Cynthia Lummis is still in play. But let's move through the agenda, and then we'll look at some charts. Let me see what we got here. We have our friend Michael Saylor, friend of the channel. He was on, I think he was with the daughter or daughter-in-law of the president on some TV show, but they were talking about how banks will start lending against your Bitcoin. All the TradFi is really positioning themselves for this right now. US government will hold Bitcoin. He didn't mention buy more Bitcoin, which I thought was an interesting twist. Big companies will embrace Bitcoin. And the Bitcoin on your phone, I think we know that anyway. But that was kind of interesting. And Saylor did buy a little bit, but it's the smallest buy, I think, in a very long time. He didn't buy for 3 weeks, but only nibbled on 130 Bitcoin, which they used their STRK preferred stock to fund that. But either way, they're coming close to 500,000 Bitcoin. I believe they'll definitely be there by April, some time frame. But that is the news regarding Saylor. Any thoughts on what he said? A lot of people thought it was very profound. I think if you follow him, it's not. But Mando, you're smiling.
Yeah, I thought this was interesting for MicroStrategy stock because it seems to be indicating, more than an ETF for MicroStrategy or strategy. Sorry, we're calling it now. That they may get into like the borrowing lending game, the collateral game, the creating yield with your Bitcoin, which I haven't seen that much commentary from him recently. It's more just been like, we're going to buy more. I actually thought the announcement last week was very, very bullish. The idea they're going to do the pref stock rather than convertibles, I think that should be taken very, very positively by the market. And yeah, this is clearly going to happen. All of these things are going to happen. It seems very, very clear that Bitcoin has been the major winner from a adoption standpoint over the last 12 months, and actually continues to kind of almost push ahead of the others. So it feels clear that like big tech is going to embrace it, banks will embrace it, and even the government seems to be embracing it.
Yeah, and you're dead right about the preferred stock, because ever since that was announced, the NAV premium exploded from 1.5 to over 1.81 today for MicroStrategy. So the market likes it. Some people thought we'd never get back to 2, but we're not too far away right now. But let's move on to this story before we get into the DGen and Bitcoin trading that's happening as we speak, because a couple of you are kind of close to the Eurozone, let's say. The ECB, this is from Matt Haugen, ECB says it will limit the amount of money people can store in digital euros to, in their words, prevent excessive outflows of deposits from banks. Like locking people in, the European Central Bank now being terrified about this, that cryptocurrencies are a challenge, especially with their plans for a central bank digital currency. Like if I was in Europe and I read this, coming from the European Central Bank, I would be a little bit terrified. I'm going to kick this to you first, CTO Larson. Every week we hear crazy stuff coming out of Europe. Is it just FUD, or are there legs behind this?
I think it's a giant mistake. I mean, who's going to want to use the CBDC digital euro? I mean, why would you use it? There's no reason, there's no benefit for the actual user of it. And I think that's what they have forgotten here. They haven't learned or understood what's happening in the US, that you're bringing all these benefits for people and companies. What's the benefit using CBDC over, for example, USDC or something like that? There is none really. There's only disadvantages. So why would you use it? Why? I mean, what's the advantage over using the bank account with a MasterCard and just a digital authentication on one side, and then you have USDC with all the DeFi community on the other side? Why would you go and use the CBDC on Euro? It doesn't make any sense. And I think they have just simply not thought this through. They have thought that this would be good for the European Central Bank. Yeah, okay, but it also has to be good for the customer. These are not business people, right, coming up with this. They haven't thought about it in terms of value proposition, value for customer, what advantages it's going to bring, what's the SWOT analysis. If you've been in some corporate workshop, you analyze the strengths, weaknesses, opportunities, threats, what's the advantages over the competition product. They haven't thought about this. So I think they're going to launch it, no one's going to use it, and they're going to have workshops, and it's going to fade out. It's going to have 0.2% market share in the end. And everyone is going to use the US dollar-based stable coins. I think it's like they have the euro-based stable coins have like 2% market share or something, and it's going to become 0.2% if this continues.
Yeah,
unfortunately.
The problem is, CTO, though, I'll challenge you on that. We are the few that understand what's coming, but most of the plebeians out there have no clue the danger of a CBDC. Zero clue. So we're talking, maybe the hardcore 4% that are in crypto will never touch it, but most will think it's just like using a debit card. They won't understand the inherent controls behind it.
I agree with that, absolutely. But I don't think also the advantage will at the same time not be clear either. Like, it's a pretty good system already. If you anyway have the money controlled by a central party, can as well have it at the bank account. And, that works pretty good too. So there is no real advantage. You're not going to be able to take the CBDC and go on pump.fun and trade meme coins or participate in some DeFi project or something. It's not going to work. You're going to be able to, it's going to be like another bank account that will probably have a worse UI in the end. Yeah. So I don't think it's going to take off. I think it will be a marginal phenomenon. And I hope that, the European crypto companies are allowed to continue to at least put up an alternative.
Because some countries as well, Mando, very well, the European version of choke point was in existence for years, whereas Santander and many other players were limiting withdrawals to crypto exchanges. But if I was sitting, say, in Germany, and I saw this, I would empty my bank account. I'd buy as much Bitcoin as I possibly could as insurance. Am I just very paranoid, or what would you do?
Yeah, I think you're underestimating the bureaucracy of the European Union. Like, this has probably just been said and could take years. The ECB writes these sort of like white papers about what it thinks, and then 10 years down the line something happens. Okay. I think that's my first point. And the second point, I agree with what CTO said, like, wholeheartedly. I just don't think anyone cares. Like, quite simply, okay, EU, you can do that. I don't think it's going to matter. No one cares about the digital euro. Particularly if you then restrict it like this, it's just not going to be a winner in the global stablecoin race, and that's to the detriment of the EU. So I would just let the EU be the EU.
Good stuff. Marty, over to you. Let's talk about this. Okay, Bitcoin. Somebody is 40x short. Their liquidity price last time I checked is around $86,000 for Bitcoin. Bitcoin's trading around 83 as we speak. Tell us about the breadcrumbs. Is it Baron Trump? At one stage, the wallet yesterday had Melania coin and short Bitcoin. They were long Melania and short Bitcoin. And the position is huge and the fees are huge. Walk us through this and the current status.
The trader has been short Bitcoin. He started at 4,000 Bitcoin short. Now he's at 5,173. They're up about 5.8 million. Now 6.2 million. And they've paid around 400K, nearly $500,000 in funding rates. So Hyperliquid's making a fortune. but they keep going long and shorts and some other random coins all the time. They went long on Millennia, then now they're long on Hype itself. It just to me seems like a wealthy trader that, okay, there's two scenarios. Either it's a competitor to Hype that's using Hype to create a large liquidation event, which could threaten Hype, which could mean it's another futures platform. And Hype is taking at least 1% away from Binance Futures every month. It's growing extremely fast. So it might be Binance related, as seen as a competitive threat. It could be another decentralized Hype. There's several of them now. There's a couple of validators. This domain is growing too. Or it could just be a lackluster new trader whale that's wealthy, that's just experimenting, someone like a Baron Trump. Now, the breadcrumb trail is interesting because the originating wallet is an Arbitrum wallet. Everything is Ethereum, firstly. They were funded by Sky, MakerDAO, original Ethereum funder wallets involved, all coming through, Uniswap and Ethereum-based liquidity sources. So it's clearly an Ethereum person. They're in the Ethereum world, and they're trying to short Bitcoin. They haven't gone long Ethereum yet, but that's one thesis, is they could go long Ethereum, short Bitcoin. But the fact that they keep touching on Millennia and Hype and all these other weird shitty coins makes it feel like just another old, shitcoin whale that's just messing around and being a degen. We don't know.
Can I challenge this? How about a completely different theory? How about it's a trick? It's someone who wanted to be public, but they could easily take the opposite position on centralized exchange. You short it in public, then you long it in private on a centralized exchange. So you're actually not risking anything, and maybe not trading anything, and maybe they want to. They know that everyone is following, and they're kind of setting it up for some kind of trick at the end where they will pull everyone's leg. I'm not sure what the trick is, but it kind of smells a little bit. Why would they do this here in public if it has this much attention? Is there another theory? That's what I want to throw out there.
Yeah. I'm talking about it could be a spoof. So they set the trade and then they pull the trade. And it's not intended to really short, although they're not taking the 6 million in profit, which is interesting. They're not taking profits, etc.
I have another theory before Mando goes. What happens if this person or group has insider information? For example, maybe they felt a new tariff would be launched this week that would rattle the markets and bring everything down.
Yeah, so there's been some of that. There's been some of that chat. This is the same trader that's been doing hundreds of millions multiple times a week in either direction, and he made money off his first 2 trades. So everyone's like, this is an insider. It's very unclear if that's the case. I've heard rumors that it's kind of an OG scammer who's like, obviously, because doing these trades on Hyperliquid is a decentralized exchange. For example, North Korea has used Hyperliquid to do trades. Like anyone can put a trade on there. So you can. Whereas on centralized exchanges where you can trade perps, that's not as easy, particularly not in. So Hyperliquid being this huge DEX with that sort of size is super useful for if you can't really touch a centralized exchange. There's some rumors that it's that. There's some rumors that you can gain this slightly. So this looks like it's one of the biggest traders we've ever seen on decentralized exchanges. But anecdotally, it sounds like these sort of trades are put on very regularly on centralized exchanges and even bigger. So it could be somebody who has an even bigger trade the other way on a centralized exchange. And people thought that is what happened over at the end of last week when he got liquidated on his long. So he was going long ETH, he got liquidated, or at least he was and people were like, well, he maybe had an even bigger short on a centralized exchange. And he uses this on-chain liquidation level as a way for everyone to just attack it, and then he makes money on the centralized exchange.
Can you walk the audience through how that works? Classic spoofing in the old days, in the old markets, but how they throw a bone to be attacked, and then they win on the other side. But walk people through that, because not everybody's going to catch it.
So we'll use smaller numbers because maybe it's easier, but let's say I'm long 50 million on Hyperliquid. And because decentralized exchanges, you can see people's liquidation levels. So the stuff that, for example, Marty posts, with decentralized exchanges, you can actually see the exact liquidation level of each trade. So it showed on the week end of last week that I think it was 1,850 on ETH. So 1,850, he would get liquidated around that sort of level. So he puts this trade on. He has this on-chain liquidation level that everyone can see. And often when this happens, people try and hunt that level. And by hunt it, they mean like they try and force the price lower so that that person gets liquidated. It's quite a common strategy with perp traders that you hunt liquidation, you hunt the periods where that trade has to come off, because it can cause a crash lower when the trade the margin gets called. So he's basically thrown up this signal, this red rag, and the market has attacked it. And on the other side, on a centralized exchange like Binance or OKX, he may have an even bigger short. So although he looks like he's 50 million long, he's actually got 200 million short on Binance or OKX or one of these other ones. And actually he makes money as the market targets his long. It's quite common. And people have pointed that this could be an issue with Hyperliquid because of how big they have become, that smart traders may end up doing this. And this is a bit of a risk for Hyperliquid, because Hyperliquid, the way it works, it actually gets left with the ETH. So when you get liquidated, like Hyperliquid has to go out and do the liquidation. And for that short period, it can hold the collateral that was put up. And so Hyperliquid, the actual coin, went down a lot over the last week because people are now scared of these huge liquidations when volumes go lower, and it's just us left.
That reminds me, actually, remember 3 weeks ago I shared a chart that there was a record high ETH short made by hedge funds. Now we can
so it could be easily that. For example, like if I was a smart hedge fund trader and I had a huge short on CME, albeit CME was open at the time. Like you could do that.
Yeah. And Marty, you just shared the liquidation level 46K or 86K, 86.6 for Bitcoin. If Bitcoin
6.3 right now.
If Bitcoin goes to 86K, this person is going to lose a lot of money, unless, of course,
they're close.
It's a delta neutral trade as well, which is the other angle. But let's get on to the good news for things that could rattle this trade. And this is from TechDev, who is pretty solid technical analysis. And I've been talking a lot about liquidity. We all have for quite some time. This year so far, global liquidity has gone up nearly 5%. Global empty money supply has gone up nearly the same amount. It is crazy. But over the last 9 years, we're going back to, well, this chart goes back to 2013, but the first dip was 2016. We had 3 points. The top line is the Bitcoin price. The bottom line is when liquidity turns around. And we've had this signal 3 times in the past, call it 10 years. And we know what happens after. Now, I'm not saying history will repeat, but it often rhymes is the story. And both times in the past, say 9 years, 10 years, Bitcoin went on a rager for the next 18 months. The question is, how high will global liquidity go? And second of all, is an 18-month rager for Bitcoin even possible? I'm going to kick it to whoever wants to take it first.
I actually don't know what this signal is. Like, while I like TechDev, he often posts these charts, and I have no idea what he's shown.
So basically,
the bottom is like, oh, okay, this looks bullish. Maybe this is good.
The bottom is global liquidity, and the top is the Bitcoin price. So basically, after global liquidity bottoms and turns around, Bitcoin goes nuts. So and it's true, it does.
Look, I think if you take it. Just looking at macro right now, there's a lot of oversold indicators. Like the Nasdaq's it's been down for 4 weeks now, and that's obviously taken out a lot of crypto as well. We're like the most oversold we've been in by some metrics in 3 years, 5 years. Like it looks really oversold. So people are looking for a bounce, and then it's the question about whether either we get a significant bounce and reversal here, or you actually go into a bear market. The fact it's oversold this much normally points to a bear market, or we get a very, very strong rebound. Now, I don't think we're in the macro worry that we were, let's say, even 2 years ago, or in COVID, or any of these other times. Like, monetary policy has a lot of room to loosen. We're still in quantitative tightening. We still have rates at four in the US at 4.25% to 4.5%. Those can go down to zero, right? And we can start printing money. So it's like there's a lot of room versus where we were in 2022 or 2020, where rates were much lower, to be able to fix things. So I just don't necessarily think we're in that sort of an issue. So I believe that we will have a bit of a bounce here. I don't know if that means Bitcoin goes to 100K. I think what we could have is just like a chop, but we just don't go down to like 75, 70K. It's interesting this year that everyone's focused on US tech stocks. Chinese stocks have had the best year they've ever had so far this year. This is not a global sell-off. European stocks are doing very, very well. It's a US-based sell-off, and that part of that points to AI valuations being questioned. That started with DeepSeek. Last week, we had Baidu come out with a different AI model, which again is challenging some of the top.
ChatGPT.
So it's really an attack on the Magnificent Seven AI valuations, and maybe the capex spend around those, and everything being re-rated there, and that's taken crypto out. The actual backdrop of the global liquidity, as you can see from Chinese stocks, is that a lot of countries are starting to pump or on their way to pumping. So I don't necessarily think we're going to like completely fall out of bed here. And even if we did, let's say we did get a sustained period now of US joblessness increases, and there's so much dry powder or like things that the Fed can do from where it was, that I think it would never be like a really sustained period.
Exactly. Yeah. Okay, Marty, what are your thoughts before we get to CTO and the chart and see if you can see anything?
I take a different approach. I think I'm extremely bullish. I think conditions are ripe for a repeat of what we saw in 2017. Also, remember that the last time we had a correction like this on the S&P 500 was 19th of February 2020. Lasted till 20th of March, went down 35%. Since then, we've just been rallying up. I mean, the bubble's been expanding in stocks since then. And then on the 19th of February 2025, we have the 10 or 11% pullback, the same exact day. I think it's just a repeat of that. I think it's just a pullback before the inevitable, which is a change in monetary policy. Remember, we haven't printed money since COVID. And in the monetary report from the Fed, in the small print, it said very clearly, we have now covered all of the damage done from 2008. So it's just a matter of time. The other big thing for me to think is, depends if you want to say the conspiracy theory or not, but I think that the previous time Bitcoin rallied up to 60,000, the bear market was triggered in order for BlackRock to enter into the asset class. You might see a similar manufactured event for states and sovereigns to enter into Bitcoin. So that's the only sort of black swan I can see, is that they're trying to bring Bitcoin down so that they can get in at a state level with all these SPRs, which we know the acceleration of regulation right now is unprecedented. Last week was the most SEC announcements on their website to do with crypto I've ever seen. There were like 45. Yeah. Normally it's 1 or 2 a month. So there is a massive acceleration to prepare for crypto. Stable coins, Bitcoin reserves, state level, something is brewing. Are they going to buy at 80,000? Probably not. They probably want lower. So just like BlackRock wanted lower, they're going to engineer some kind of catastrophe. Now, it's a conspiracy theory. I know there is no true evidence, but what could they do? Binance, I think, is my biggest target and always will be. That's 600 Bitcoin. Binance is, you saw the Cayman Islands is now, just like Bahamas, announced that crypto platforms will require licenses. The same playbook is getting played out on Binance as FTX.
That's an interesting theory, Marty. Imagine the global coordination between hedge funds, between whoever that player is with the 40Xer going short, and a sovereign wealth fund or a nation state trying to stack Bitcoin. CTO, what do you see in the charts?
Yes, I try to stay very open-minded here, and I try to focus on the facts. So the facts here are that Bitcoin has simply followed the S&P 500 for the past half year plus. Stocks go up, Bitcoin goes up, stocks go down, Bitcoin goes down, both go up, stocks goes down, Bitcoin goes down, stocks up, and so on and so forth. So in fact, Bitcoin has, relative to its usual movement, held up a little bit better here than stocks have, as represented by the S&P 500. But they do move in the same direction. So I think that the best clue, of course, we don't know if this relationship will continue. You know, it could change tomorrow. But if it does continue, which seems a reasonable guess, I think the best clue we have is to look at the stocks chart. And if we do, we see very clearly that it has really dumped bad, but it did bounce here at the exact support level. You know, here it was resistance, support, and so on and so forth. So it did bounce here. So I think the key question now is, was this it for the stocks bounce? Is it going to go up from here? I mean, it hasn't dropped that much. It feels like a catastrophe, but this is only like 10%. If we zoom out a little bit, that's not so much. The stocks have frequently dumped like 20 or even like 30% in the COVID dip. So it's only 10%. It's not much. It could go lower. And if it does, I think Bitcoin will go lower also. But if it actually bounces here, if this was it, and it starts, you know, going up here, I think Bitcoin will follow. And it would be a logical thing for Bitcoin to do, because if we look at the drop, see if TradingView can please load. If we look at the drop from the exact Pico top to the Pico bottom here, that was 30% exactly, 30.00%. And when this range here broke down, which was a surprise to me, I'm not going to sit there and say that, you know, I predicted it would break down. No, I thought the range would break on the upside. It didn't. It broke on the downside instead, and the retests failed from the underside. They failed to climb back in the range. And we actually reached the breakdown target exactly. Like the target from a range breakdown is the height of the range, and it reached there exactly, like on the pixel. And then it has bounced up a little bit now. So, I mean, it could be a logical place to turn for both stocks and Bitcoin. It has reached the target. There has been some buying interest. It kind of moved up a bit here. But I'm not going to sit here and claim that I can predict what will happen next now with the stock market or Bitcoin. I don't know. And I will not pretend that I know either. So I will try to react. If we hold this low, if we don't go back into this circle, okay, we have a great position here. Actually, we could move up. Perhaps we come back in the range. We turn the trend back up and break out on the upside, and maybe stocks really bounce back here and come back on a completely different note.
It's a really interesting point.
Sorry,
I was just saying it's a really interesting point that you're making, because I just think that a lot of crypto people focus on global liquidity as like the leading indicator for crypto. And now's the point, whether are we just levered tech stocks, or are we actually going to turn up with global liquidity here? And I think that's my view, is that we will probably outperform stocks if the S&P goes down another 10, 20%, but you can't bet on it really, can you? Like, there is correlation between both of them at the moment. And that's kind of the question. I think some people are bearish on like general macro, but they think, you know, we're going to get a bailout. We're going to get QE. We're already starting to see pumping. You're already starting to see the effects of that in like China, for example. Or do we continue just to follow tech stocks lower here? And really, like the fallout of the Magnificent Seven has just taken down a lot of crypto. And it feels to me that maybe that's a question between Bitcoin and alts. Like, Bitcoin in that world actually continues to outperform altcoins probably. But like, if tech stocks go down another 10, 20%, L1s could probably underperform a little bit.
Yeah, and see, you use the QQQ as well. It's even better when you show the correlation between Bitcoin and the QQQ, which has been super tight for the longest time.
Oh yeah,
I mean,
absolutely.
my opinion, Trump, the election was the 4th of November. Bitcoin is 68,200. We ran up to 108,000, held that level for a while, and then pulled back and corrected. down to 80,000, 82,000. We haven't given up the Trump pump yet. All altcoins
Absolutely.
have.
And one more point. If I can just continue this,
Go
then
ahead.
I'll hand over to Marty. So I think the pain that a lot of people are seeing is more about this chart. This is the speculative altcoins. So the altcoins minus the stable coins. And that has dropped much more. That is 50% from top to bottom. And most altcoins have dropped much more. They've dropped like 70% because actually the biggest ones haven't dropped that much. So the majority of altcoins are down around 70%. And I think that's the incredible pain that a lot of people are feeling, even though tech stocks are actually, or stocks are only down 10%. Bitcoin is in quotation mark, only went 30% from top to bottom. And at current level is down much less. But the altcoins, many are down 70%. And that's the pain. And the thing is that, that doesn't mean it can't go lower. If we look at just 2021 here to 2022, the speculative altcoin market cap dropped 82%. So just because it has gone down 50% doesn't mean that it can't go down more. So I will keep a very open mind here, but right now it looks carefully positive. We have actually seen some buying interest. We reached the target. Price has turned around, but we need some confirmation. We need to get back into the range. And I think the best clue is really what happens with tech stocks. I agree with Mando. I think that we could outperform the tech stocks, absolutely. And we have outperformed. Like the drop in Bitcoin relative to its usual movements have been less this current dump. But I think the direction gives us a clue. Like if tech stocks turn around and go up, I think it will pull Bitcoin with it. If we have absolute disaster in the stock market, I think it will drag down Bitcoin with it as well. The fact that gold has gone up has not helped. Bitcoin has not traded like gold. Gold reached 3,000, and that did not pull Bitcoin with it.
Exactly. This is another interesting chart which tells us it's kind of bullish. If you watch what the hedge funds do, these are crypto hedge funds, the chart from Bitwise, on the 20-day rolling beta to Bitcoin. And it's a proxy for how much exposure the hedge funds actually have. And it's been incredible because the hedge funds were very clever to get out over the last couple of months, but they just very late Feb, early March, they started going in hard again into crypto funds. So they're piling in, increasing their risk exposure to Bitcoin. The question is, why? Is it because the price is low? Or they wanted to lock in gains that they got before, and now they're going back into the trade? Any thoughts on this, Mando? I know you track what the hedgies do, and I know they're not right all the time, but they're right most of the time.
It's interesting. I hadn't seen this, but like what we've generally seen over the last few weeks is hedge funds are shorting stocks at the fastest pace they have shorted them in 5 years. And it's been that's been like one of the notable things happening in the stock market. It's interesting to see that like over the last week or two, they've been going more long. We have seen like a slight reduction in the number of shorts out there. Part of this is like the collapsing of the delta neutral trades. Like the basis trades, is because funding has come down so much. I don't know. I don't think crypto looks like an obvious short here. I think it's quite a dangerous thing to short, if I'm honest. So if I was a hedge fund right now, I wouldn't be trying to play the 83 to 75K move. Like that just doesn't feel like alts are already down so much. I'd be way more worried about a slight rally in macro causing a large pump across the board. So this doesn't surprise me, like how much some of the stuff is down.
In fact, you mentioned alts down across the board. This is the top 50 alts and the distance from all-time high. It's pretty staggering that if you are to calculate the average of all of this, the average alt is 50% off the all-time high. Some are still 90%. They'll never come back from where they were. But this is kind of staggering. Marty, when do you think the alts will turn around?
I mean, the alts are just typically on the daily RSI oversold. They are turning around. I think they will turn around right here. I think hedge funds are trading against the daily and weekly RSI. Oversold territory, you go along, you buy. So I think alts will turn around here. The whole question, I think Bitcoin will follow global liquidity. It did its 50% pullback. It's now working its way up again. Like I said, my only concern is a potential black swan, because I don't believe US states are going to buy at this price. I think they want a discount. So how they did their discount will be, what we're going to be talking about the next few weeks. If that doesn't happen and they have already acquired, or they're going to acquire somehow OTC through Coinbase, then I think we continue up. I think altcoins are great buys right now, specifically the ones that have high adoption and have incredible technical roadmaps with lots of developer action, and we know which one those are. So the other ones won't recover, and they shouldn't, because they're vaporware. So
and they're still clinging on to the dream of sovereign wealth fund SBR edition. CTO, a lot of listening to a lot of people in the audience, and they've gone through a lot of pain. We saw last week on chain that a lot of retail Bitcoin holders with less than one Bitcoin gave up. They just got out. They said it couldn't take any more pain at 80K, 82K. And same thing for the alts. They sold those even earlier. They're just like, I'm out. Can't take this pain anymore. What would you advise those people out there? Because to me, this is a time that you want to get in, not get out.
Yeah, it's an excellent question. And there's a lot of research on this. And an interesting fact is that in Sweden, they did this research because it's very transparent. So people who have bought Bitcoin certificates or crypto certificates over the past 6 years, I think it was 6 or 7 years, where the market had gone up 25x, so 2,500% up. And you can only buy the long certificates. And still, the majority managed to lose money. So how is that even possible? Like, if the market goes up 2,500%, how can the majority of people lose money? How is that even possible? Like, the monkey would make a lot of money in that market. If the monkey throwing dart would get rich, banana zone, would get a whole new meaning. But majority of people lose money. How is that possible? It's because they do systematically the same mistake, most of them. They buy when they are most euphoric. When you go on Twitter, the taxi driver has gotten rich. Everyone is like talking about this amazing opportunity. That's when they buy. That's the top. That's the euphoria top. Then they hold it all the way down. If we look at your chart here, James, there's a lot of coins that are minus 60%, minus 80%, minus 97%, and so on and so forth. So they hold it all the way down. And then they feel, even though they are down 97%, they could as well hold the remaining 3% also, but they sell because they can't take the pain anymore. They just don't want to see it in their face anymore, so they sell. At the depression bottom, that's when they sell. And that's the bottom by definition. When the last optimist has given up and sold, that's the bottom. And then it turns around. And then they do it all over again in the next cycle. So even though the thing goes up 2,500%, they still lose money. And that is the advice. Like, don't buy at the euphoria top and sell at the depression bottom. Try to find some other mechanism. And there are hundreds of good ways. Try to do fundamental evaluation? Do you do trending? Do you do technical analysis? There's like 100 ways you can do it. But have some kind of system. Don't rely on your gut, because you will feel the most euphoric on the top. You will feel the most depressed on the bottom. And I read one funny comment. One guy had realized this. So he did the opposite of what he felt like he would do. He had lost money for like 3 years or something. Then he started doing the opposite. So when he felt like buying, at the last minute, he pressed the sell button instead. And when he felt like selling at the last minute, he pressed the buy button instead. And he actually started making money. So this kind of exemplifies this point. You have to have some kind of system. You need to rely on data. You need to have some brainier approach than just go with your gut. That is that. Now a lot of people start feeling depressed, and so probably it's a better opportunity here than it was when we were at 106,000 and we were all excited.
Okay, let's get into and Marty, I'm going to add you here. Let me see if I can pop this up.
Yeah, I mean, the problem is that people buy, when you say buy the lows. I mean, this is the perfect time to buy altcoins. Absolutely. Yeah. The problem is not all altcoins are the same, and that's the biggest problem. Not all crypto is the same. There's only a few crypto that matter, and the rest are junk. And people are going to buy junk at the bottom, and it's going to go lower, and then blame crypto. So you have to be really careful in these times. This is your time to stop holding bullshit.
And
Go
in
ahead.
fact, Marty, a lot of data FUD around Twitter that Sol is dead because the meme coin stuff died, etc., etc. But clearly, that has not changed. Daily active users, daily transactions are pretty much the same as they were back in December. No change there. ETH to Sol, the black hole, still alive and well. 314 million bridged from ETH to Solana, which is 460.
bigger news on Solana is the volatility shares futures went live today. Sol T and Sol Z. It's a 2x long and a 1x short. That's the gateway to the ETF. We also got Solana in the Federal Registry. That's the last step. It just went in the Federal Registry last week. So either Franklin Templeton or 21 Shares Solana ETF is literally weeks away from going live.
And then stable coins, Marty, stable coins have skyrocketed year to date on Solana. Is this because Circle USDC will get the rubber stamp from the US government?
I think Circle has the rubber stamp. I think Tether Howard Lutnick is literally the Tether's custodian. So Tether and USDC have got the rubber stamp. They're increasing their supply. They're issuing like crazy. If you look at the 2024 March stablecoin register and then the equivalent March this year, Ethereum was 75 billion in stablecoins in 24 March. It's now 127 billion. So roughly, just under 2x. Tron was 48. It's now 64. It's gone up slightly. BNB was 4.7. It's now 7. It's gone up slightly. Solana was 2.3. It's now 12.5. It's done at almost a 8x in stablecoins.
If this rate continues, if this compound rate continues, Circle could be as big as Tether by the end of 2025, which is crazy. And then 57% of all fees are happening on Solana. So it's, crypto's not dead, but this is like a mini crypto winter in the middle of a raging bull run, which is...
No, I think crypto's never been dead. All that died was the crypto casino, thank God. Crypto is very much alive. We've got the Genius Act stablecoin bill just like literally going to get voted on the Senate floor. That could be the biggest moment in crypto history. That makes crypto legal tender in the USA. And the vote was 18-6. It's not even close. That's going to happen. That's crypto. Crypto will be stablecoins, real world assets, and store of value reserve in Bitcoin. So it's never been more bullish. What died was the quick, easy gambling money, which thank God, because that was terrible. It was just a bubbling pot waiting to break. We also got new stable coins have flipped Visa and MasterCard in this year, processing $15 trillion.
And we're still very early in that adoption. And there's a ton of what I call kind of emerging market, third world adoption for these stable coins. People that need to use microtransactions to move money around, sending less than $10. A huge amount of adoption there. I'm going to throw something out to the group here because I had a very interesting question come in over the weekend, which took me by surprise. And it's going back in history. It's important to study history. And this ties into Mando and CTO, the era digitalis, the AI revolution that's happening. Back in the 1890s or even earlier, 1880s, these were the tycoons of the world. These fellows here basically controlled 50% of the net worth in the United States and probably the world. They were driven by railroads, steel, oil, banking, technology, unions. The world has changed. So I tried to frame up, I do believe there's going to be huge exponential money made over the next 5 years, but it's important for people to position themselves. And I was thinking, how would this world from 140 years ago translate to today? And I took a stab at this, and it's very far out of left field. Railroads becomes kind of the communication method, which would be SpaceX. Steel is NVIDIA, all the core compute happening there. Oil is energy. Bitcoin is energy. Saylor always said that too. Law of thermodynamics, etc., the preservation and transfer of energy. And you can use now Bolivia and is it Costa Rica or Brazil? Part of BRICS, they want to use Bitcoin to trade oil, which is right there, energy. Banking, BlackRock, the biggest money runner on the planet. Technology, autonomy, AI, bots, Tesla, and knowledge, Grok. Is this a dream? Because one of the things that I'm always trying to do is play where the puck is going to be. Fast forward into the future, these spaces will control a lot of the wealth, and people should be positioning themselves in these areas. Mando, kick it to you first. Am I smoking something bad here?
No, it's
Or-
very, very interesting point to make. Obviously, all of these industries that you have at the top are all like very, very mature now. So you have to think about what are going to be what are the younger industries that are going to grow incredibly quickly. I think AI just points to the biggest one right now. The number of the companies mentioned here kind of touch upon that or are very, very close to it. And then I guess space exploration would be probably number two. So yeah, this does seem like a very interesting way to kind of put stuff. It is very, very uncertain, I would say, the next 5 years. People always say this, but I think there's almost like a question with AI. There's a question of, does capitalism even work? Like, does the notion of a corporation, an organization, work in the same sort of way? Like, are we all just going to be giving up our jobs? I haven't, when people talk about uncertainty over the next 5-10 years, it hasn't really like shaken the foundations of like how we go about society, let's say. Like, so I find it very, very difficult to work out. I do the shows often with Raoul Pal, and he often talks about that you only have like 6 years, or I think it's till 2030, right, before everything we just goes crazy. Like capitalism as we know it just doesn't really work. And that's
the exponentiality here is unfathomable. But when you forecast forward the change that's coming, and you could say this could be the Western world, and then China will have their own version of this too. So, but yeah, I think, as you say, it's hard to fathom if this is actually happening or it's going to happen. I firmly believe the next 5 years will be radically different because all the parts are there for this new gilded age.
Yeah, but it's difficult to choose the companies. Basically, what I was going to get to there is like with AI, we've already seen, Baidu comes out with a new model, and suddenly everyone questions, what's going to be valuable. Like, do companies like BlackRock even like, are they going to be as relevant, you think, in 5 to 10 years if we go down this sort of route? It's just so difficult to predict, but you can come down to Bitcoin time and time again and think, you know what, this actually is an interesting thing to hold over this period, because in most worlds there, you think some form of decentralized value, if the whole world is going to go through a period of like upheaval, I think that's one of the things that could be incredibly value, and the scarcity value of it all. Like if we go into an age of AI, you're talking about an age of abundance where everyone can have everything, like you kind of see like the snippets of that in the diamond market. I don't know if you've seen this recently, but like they can make diamonds now, and like the diamond prices have gone basically down to like, you can get really, really cheap, amazing diamonds now.
How do we short the beers?
Imagine that for everything, right?
Yeah.
But with Bitcoin, that doesn't really get affected. So I like that in an age of abundance, you have this like scarcity of supply thing.
Exactly. And that Bitcoin logo, by the way, is MicroStrategy's new logo. Era Digitalis, CTO, I want your view on this so bad.
Yes, I think it's very clear to me that society has already taken a different turn. And I mean, the four of us were sitting here, working digitally and trying to figure out the rest of the digital world, what is going on. And I think a lot of people really feel the same, that it has already changed. We're all sitting here talking with chat as our new colleague every day, and it is a new world, and I think it will keep changing, and it will change faster and faster. And then to figure out which companies will be the winners has historically been pretty difficult. Like in the beginning of the .com era, in the retrospective, it was very obvious that Amazon was going to win, but it wasn't that obvious in the beginning. And I think it's important to be a little bit fast on our feet here and follow what actually happens, because it's much easier to observe what is happening than try to predict which of these companies in 15 years will be the most successful. That's much more difficult. So that's my strategy on this. And I think that, like you both said, important here is to not forget about China. I think a lot of people are underestimating China. I think they could be a formidable competitor to many of the Western companies over the next couple of years.
Absolutely. Yeah, don't fade China ever.
Yeah. We have to definitely watch that. And I think there could be a lot of opportunities there now, actually. So that's I'm very interested in that. But I think your slide is very great, James. I think, AI is the new steel. Bitcoin is maybe the new oil. Banking, the old banking is really challenged. It's going to be different type of companies.
Or it could be the ECB central bank digital currency. That could be the new BlackRock. Who knows?
Who knows? Maybe it takes over everything.
Yeah.
Maybe we will all love it so much.
Yeah, Marty, are we smoking crack here? Or how are you positioning yourself for the next 5 years?
I go back to the 100-year cycle as always. I think that we're going from a centralized model to a decentralized model. And everything that is happening is playing out perfectly. I think the notion of a corporation will change entirely. We're already seeing that with the public domain assets now. Crypto is a public domain. There is no corporation. And the public will get much more involved. I also think open source is a big player. If you go back to your previous slide, where does open source fit into that model? It's a new thing. It's an entirely different thing. Linux is open source. It's used on every computer in the world. Bitcoin is open source. It's becoming the reserve asset of the world. Solana and Sui are open source. They're going to move the money and ownership rights of the world. These are open source. They're not owned by anybody. They're owned by the public. We, the public, can invest in them. So the notion of a corporation is changing. And I think a lot of what we're seeing is the shuffle and the panic of the corporate capitalist model to try and work out where they will belong. And AI and robotics and manufacturing is the most important thing. It reduces the costs of producing things and business to a point where you don't need humans anymore. And I go back to the same old question: what are humans going to do? And no one's got an answer. No politician has an answer. No philosopher has a good answer. No one even wants to take on the question: what are people going to do in the next 25 years when robotics take over, AI takes over, everything goes open source? There won't be corporations to issue jobs.
Yeah, somebody had a funny quote here: "You'll own nothing and be medicated." It's like hilarious. But your point regarding centralization,
the corporations will no longer have control of what you can own. I think it's the complete opposite. I think you, the public, have the ability right now to own the infrastructure through crypto, and it's going to close. That door will close. They'll mark it up so that you can't afford it. So don't forget that. Don't screw it up, as Raupa would say.
Mando. I think what CTO was saying though, like what we really have seen over the last 6 weeks is that China is a lot closer on the AI revolution than I think people first expected. Like if you remember a couple of years ago, it was always like, oh, US is just so far ahead in terms of funding, research. China's come out with we've had Baidu, Manus, which is this AI agent platform, which everyone seems to be saying is incredibly strong, and obviously DeepSeek. And it's going to be interesting to see there, because we've spoken about how does China fix itself from a demographic level. It feels as though robotics and AI is like the number one way for them to do that. So maybe they do go absolutely crazy and they share kind of the lead, let's say, with the US and a lot of this technology. And that might not be great for the US stock market.
Yeah. Awesome. Let's get to the final topic and then we wrap. And we try 420 Empire. Key events this week. A lot of data coming out on the macro side that could impact markets. Home sales. The home sales, by the way, U.S. home sales hit a record historic low. There has never been a time in the history of the United States where so few houses have been sold. Talk about commercial real estate destroyed, residential real estate destroyed. That is a huge part of the U.S. economy. It is completely dead. That needs to change. That's why the administration is trying to get rates down, because nobody can afford a house with these rates. And also rates, no Fed cuts in March. So that's not going to be a catalyst for us. What are you thinking, guys, for the week ahead? What is your plan? I'll start with you, CTO, first.
I'm carefully positive here, and but I want to see some confirmation before I go in with size. But that's my plan. I did open
the big bag.
Near this target. but I will have no tolerance for a drawdown here. So that's my plan. I want to see confirmation. I want to see price come back into the range, establish itself there, and then shoot up. If that doesn't happen, if we start dropping down here, deep into this previous range, okay, then I'm pulling the last handbrake basically. But we're not there yet. I'm carefully positive right now.
And the range is so tight, it has to be manipulated. I mean, literally for the last 9 days, it's like a D flat line. In Bitcoin terms, it's crazy lack of volatility. Mando, what's your plan for the week? How are you?
It's a very, very big week for macro. Very, very big week. We had retail sales today, but we have the Fed, we have the Bank of Japan, we have the Bank of England. Now, obviously, the Bank of Japan and Bank of England are much smaller, but those are two countries which have been in the stresses of the global bond sell-off. Particularly Japan keeps on hitting high yields, and that's not a place that really suits high bond yields, given they have nearly 300% debt to GDP. UK similarly, some worries there. So like big for a lot of the central banks. Wednesday's the big day, so you'll see volatility around that because you have the Fed too. They're not going to cut rates this week, like most likely, almost certainly, but they could be very dovish and point to rate cuts in Wednesday. So it will all be about the press conference. I think I would be very surprised if we have another down week for tech stocks and the Nasdaq. We had four down weeks. I think we're sort of bounce territory. And then as CTO says, like stocks are about to decide, are we going into a bear market or can we kind of sustain this bounce? You only really have sell-offs this bad or this aggressive if it's the start of a bear market, or then you have almost like a V-shaped, really good next 6 months.
Yeah, it's funny. I must say compliments to the audience this week. Everybody, the comments I'm reading here are just people are dialed in. They know what's coming. So super impressed. Thank you for that, Mando. Marty, wrapping with you. Any plans? Any long plans? Any short plans? Any deployment plans for the week ahead?
I think it's pretty pivotal. The 19th of May meeting, I think, could be a historic meeting, especially the statements afterwards and the tone of Jerome. I think we could see some major moves. Remember, we're 36 trillion in debt right now, right? 7 trillion needs to be refinanced over the next few months.
9.2.
We owe Japan $1 trillion. We owe China. US owes Japan and China now $1 trillion. And they want that money. And these interest rates are high. So rates have to come down. The 10-year yield, the 2030, all moving up. Europe is in crisis mode. I mean, Greece and Italy are over 140% debt to GDP right now, and it's rising every day. So something has to break. And I think we've been looking for something to break. They need to break something, cause that final capitulation, and then we trade up from there with QE. And so what is going to break is going to be the question. The FOMC could give us some hints. If Jerome is hawkish, could make a very, very different tone. We could see more stock sell-off. If he's dovish, we might see a major reversal. I think Jerome Powell talk on Wednesday will be pivotal for our next week's show. We'll talk about it, I think. And that's who we are. As far as my personal moves are, I'm not really going to be changing my portfolio drastically until after Wednesday or on Wednesday. But I'm still, looking to buy discounts on the altcoins that I like. I think Sui's going to have a big run. So I think Sui at these lows around $2. You can see it there flying right now. At around $2 is a good buy. I think Solana anywhere around 120 is a good buy. Those two, I think anybody getting into crypto, this is your time to start your bag. Bitcoin at 83, I'm not buying. I think it still needs to come down a touch more for me to be interested in the sevens. I would say in the sevens is where the states get involved. I know Governor Abbott is a fan of the sevens, and he's probably the first to sign. So I would say the states enter at around the sevens. So expect to see that. That'll give up the whole, maybe a 5 to 10% increase over the Trump entry in November 4th at 68. That's where I am personally. But everything's sort of aiming directly towards the FOMC, I think, on the 19th. Europe's watching it. The stock market is watching it. Rates have to come down. There's no way around it. It's not about us. It's about the mortgage crisis right now developing, like you said. It's about sovereign debt rollover. These are critical things. They're going to break. Banks are pretty much bankrupt. The word bankrupt starts with the word bank, and they are bankrupt. Yeah.
And I just realized it's St. Patrick's Day. Happy St. Patrick's Day, everybody. Hope
Yeah,
we
man.
get some
Happy-
beers tonight. My plan is to continue to nibble on AI at these very low prices. I'm taking advantage of this NASDAQ tech dip. And yes, Sol and Sui are looking very attractive at exactly those levels. Thank you, everybody, for that. The links below for everybody's channels will be on the, it depends where you're watching. On my channel, you'll see the links for Mando's newsletter, the CTO's channel, and of course, Marty on X and the spaces all the time. And everybody's watching everybody on everybody's channel. So we have over 14,000 people watching live here, which
Wow,
is
for a bear market, that's not too bad.
it's really good. Yeah, it's really good. This is the all-in pot of crypto, as Mando says.
Yeah.
Thank you all so much for coming, and thank you everybody for being so aware of what's coming. That's really impressive to me. People are dialed in, and now is the time to prepare for what's coming. Thank you all. Have a good night.
Thank you all very
Thanks,
much.
guys. Really good to see you again. See you
Cheers,
next
all.
week. I think next week we'll have a lot of things have changed. I have a feeling
Yeah.
Wednesday, Thursday, Friday this week are going to be pretty big.
We're seeing
Leading to
bottom
end of the
signals again. we'll see if we're right this
I
time.
know Canary just filed, obviously it's just Canary, but they just filed their SUI ETF. So now they have a full stack of pretty much all the alts we love. So
Yeah,
it's
definitely.
happening. Yep. ETF
stuff.
acceleration like you've never seen before. It's
And we
happening
got a
right now.
friendly SEC, which is wonderful. Let's go, guys. See you all.
Okay.
Thank you all for coming. Thank you to mods in the chat. Have a good night. Happy St. Patrick's Day.